Good day, Team GCI. I'm Brad Alexander, and in today's GCI Market Outlook, let's take a look at Forex trading on WTI crude oil, gold, silver, pound dollar, Kiwi dollar, and euro dollar. Just a reminder that these videos are intended as educational. We are only observing current market conditions, and these are not to be considered as trading advice. We see US dollar strength right across the board, and it's very important for traders and investors to understand why. Firstly, we just saw the latest CPI and PPI, in other words, inflation figures, were reported higher than expected, and these figures always bolster a currency. Secondly, US Treasury yields are higher, which has investors buying US dollars to invest in T-bills. Also, the price of crude oil is still elevated due to the Iran war, which is a clear sign that inflation fears will continue. And finally, all the above point to the fact that the Fed will not likely be able to lower interest rates anytime soon. We see euro dollar at support at around $1.65, and price action has already broken through key levels. If we move out to the daily chart, we see price action breaking a huge double top and with many key levels below. Technically, we see bearish indicators with a signal line breaking out of the MACD histogram and a falling stochastic oscillator. I encourage you to investigate all US dollar charts like this one on Kiwi dollar, where we have clear key levels right now and a very bearish MACD. And for you traders who rely solely on technical indicators, you need to be very aware of fundamental analysis, as geopolitical issues, investor preferences, and the US Federal Reserve will drive the value of the US dollar. This is also affecting gold, as we see 4 days of red candles and the bodies are getting longer. We see price action in a symmetrical pennant, and we will watch our technical indicators and the lower trend line as price action falls. We see similar characteristics in silver, but again, keep an eye on the news and the relative strength of the US dollar. We see the same thing again on the WTI daily chart, but fundamentals are driving the price of crude oil with the Iran war. Yesterday, Donald Trump said that the US doesn't need to open the Strait of Hormuz. Technically, this is true, as the US has enough oil. However, the price is at $102 per barrel, which is seriously hurting the US economy, and this seriously affects inflation and the chances of the US Federal Reserve lowering interest rates. And finally, one of the weakest currencies is the pound for one reason: political instability. Keep your eye on the news, as almost any positive news out of London may reverse the trends in GBP pairs. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.